Have you ever wondered whether investing in IRBX, iRobot stock, makes sense in 2026? Today, we're going to break it down in a realistic, honest way so you can understand if this stock might fit into your portfolio. I want to start by saying this comes from my personal experience following robotics, AI, and tech stocks closely. I'm not a financial advisor, and nothing here is a guarantee. Results may vary, and you should always do your own research before investing any money. Let's start with the basics. iRobot, ticker IRBX, is the company behind the popular Roomba vacuum robots. They design and sell home robotics products, software, and increasingly AI-enabled devices. They're also branching into smart home ecosystems, partnering with other AI-driven products. So why does this matter for investors in 2026? Robotics and AI adoption in the home is growing fast. People want smart, automated solutions for cleaning, monitoring, and even AI-assisted household tasks. IRBX sits in the middle of this trend. They have brand recognition, patents, and a growing software ecosystem that gives them a potential edge over competitors. But it's important to know the risks. Now, let's talk stock performance. IRBX has been volatile historically. It's not a linear growth story. Revenue fluctuates depending on consumer demand, supply chain issues, and new product launches. As of 2026, the stock is trading at levels where investors are carefully watching growth metrics, profitability, and product adoption. It's not a lottery ticket. This is about understanding the company, its market, and realistic growth expectations. A realistic daily routine for monitoring a stock like IRBX could look like this. Spend 15 to 30 minutes each day reviewing company news, product launches, earnings reports, and SEC filings. Check verified apps like Robinhood, Webull, Fidelity, or PayPal-linked brokerage platforms to track stock movements. This keeps it safe, legal, and transparent. When I personally analyze IRBX, I focus on 4 things. 1. Product demand. How well are Roombas and other robots selling? 2. Innovation. Is the company improving AI, integration, and smart home capabilities? 3. Partnerships. Are they connecting with other platforms to grow adoption? 4. Financial health. Revenue, profit margins, and cash flow trends. For example, if iRobot launches a next-gen AI vacuum or a subscription-based smart home service, that could significantly increase recurring revenue. On the other hand, supply chain disruptions, competition from other robotics brands, or declining consumer spending can affect stock performance temporarily. Being aware of these factors is key before deciding to invest. Now, let's talk about realistic earnings for someone investing in IRBX. This is not about day trading or expecting overnight riches. If you bought $10,000 worth of IRBX stock and it grows 10 to 15% over the year, that's roughly $1,000 to $1,500 gain. It's modest compared to hype-driven tech stocks, but this is about steady growth aligned with the company's performance. Common mistakes beginners make include expecting huge overnight returns, panicking on a temporary pullback, ignoring product and market fundamentals, relying solely on social media hype or Reddit discussions. IRBX is not a get-rich-quick stock. It's a company with real products, patents, and a growing role in AI-enabled home automation. A better approach is to track its innovation, adoption rates, and financial health. Who is IRBX stock for? Heavy checkmark long-term investors interested in robotics and AI. Heavy checkmark people who want exposure to the smart home market. Heavy checkmark investors comfortable with some volatility. Who should avoid it? Crossmark short-term traders looking for immediate gains. Crossmark anyone uncomfortable with stock price swings. In conclusion, should you buy IRBX stock in 2026? It depends on your goals. If you want exposure to AI-driven home robotics with a company that has brand recognition and growth potential, it deserves consideration. If you're chasing hype or guaranteed profits, it's not for you. The key takeaway: invest with research, patience, and understanding of risk. Monitor products, AI integration, partnerships, and financial health rather than just stock price. If you found this breakdown useful, hit that like button, subscribe for more honest stock insights, and comment below. I'd love to hear if you're considering adding IRBX to your portfolio. Remember, investing is about long-term knowledge, not chasing short-term hype. Thanks for watching, and I'll see you in the next video.